Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my March pick. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has been very positive since the last few days, which jumps due to one semi-viral shorts. Additionally, we grow as much as I expected in the daily number of visits and new subscribers recovering summer evolution numbers. The evolution continues to grow, although it is necessary to find a new approach to try to attract more people. I would like you to leave me in the comments if you prefer that I make the videos as before, or if you prefer that I make a weekly video of about 10 to 12 minutes where I analyze 4 or 5 companies that may have a very attractive valuation. Wow! This month we have surpassed the goal of reaching 800 subscribers by far. So for this month the goal will be to reach 1,000 subscribers finally. Do you think we will achieve it? The evolution of the investment made in February has not been so good, as it maintains the same price that it had the previous month. Comcast and NextEra Energy also have dropped almost 8% and 6% respectively in the last month. However, Texas Instrument and Texas Roadhouse have had an excellent month with an increase of 5% and 20% respectively, which makes Texas Roadhouse has given me a total return of 45% since we bought it in September. So, since I started investing, my portfolio has grown by around 4% in general. Remember that this is a very long-term investment, and that the objective is not to obtain a high return in the short term, so this large drop of Comcast and NextEra Energy in the last month does not worry me too much, since I fully trust my estimates of the intrinsic value of them. The good news is that during this month we have received dividends. Specifically €1.02 of Texas Instruments and 44 cents from Starbucks, that make a total of €1.46. Moving on, I currently have 27 stocks from different sectors on my watch list, but for today's video we will only focus on those that are below my estimate of their intrinsic value. Because remember, you always have to buy low and sell high, and not the other way around. As simple as it may seem, most investors lose their money by not following this advice and selling their shares when the price has already fallen, and panic and buying them when everyone is talking about them and the price is overbought. Additionally, we will not consider companies and sectors that we already have in our portfolio to diversify our portfolio and reduce risk. This month, I introduced new companies and sectors to this watch list with new intrinsic values for me. So we will go on to analyze in depth companies such as Hershey, Johnson & Johnson, Kroger and Pepsi, since they are 4 companies that have an upcoming ex-dividend when I made the analysis on the 12th of February, and some of them will allow us to receive dividends this month again. In order to better evaluate each section that we are analyzing, I have decided to create a Google Sheets table in which we will place the score obtained by each company, like the previous months. Let's start by checking the dividend safety. Both HSY and PEP have a dividend safety of 93, while Johnson & Johnson has a perfect dividend safety of 99. Finally, Kroger has a lower dividend safety. Even so, I consider that the safety of all 4 is good. Regarding dividend yield, all 4 have a dividend yield between 2.5% and 3.5%. So they are in the range I am looking for. However, if we look at dividend growth, the situation changes completely, since the stocks that had a higher initial dividend are those that have the lowest growth. Even so, the growth of all of them seems stable, with the last and the annual compound growth of the last 5 years being almost the same. Continuing with the evolution of the revenue and earnings of each company, all 4 have had a positive evolution, although Johnson & Johnson's is a bit inconsistent and Kroger has difficulty increasing earnings proportionally with increases in revenue. That is why Hershey and PepsiCo are the 2 best of the companies analyzed. Now, if we look at the evolution of free cash flow per share over the last 10 years, the only one that has had a positive evolution is Hershey, since the other 3 have had a somewhat flat and inconsistent evolution with years of growth and years of decrease. As I mentioned in my previous video, I want to make investments in companies that make buybacks, and all of them meet that requirement. although Kroger buybacks have clearly been broader. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to our fair value analysis. Johnson & Johnson and Kroger are close to the 5-year average price-to-earnings ratio, while the other two are below them, indicating an undervaluation of their respective prices. Moving on to yield on cost, here Kroger is also the clear winner with over 10% compound annual growth rate over the last 10 years. While the other three have barely managed to double their yield on cost during the last 10 years. Finally, we will see the total return that each stock has offered during the last 5 years. With two companies, Pep and KR, they have managed to reach 60%, which marks that 10% annual profitability, and Hershey has obtained a total profitability very similar to VOO during the last 5 years. However, Johnson & Johnson has achieved a total profitability over the last 5 years of around 35% due to the weak increase in price. Once we have all the values of the scores obtained, what I will do is multiply the average of all the sections by the score obtained in terms of dividend safety in order to more efficiently adjust the results to its security. Well, as you can see, Hershey and PepsiCo have obtained the highest score, but I will choose Hershey due to his dividend growth and free cash flow evolution. So PepsiCo will be a company to take into account in the future. As a result, Hershey will be our pick of March. Then we enter the Scalable Broker and carry out the operation, looking for the HSY ticker. Remember that I will always try to make a purchase of around €100 so that the commission is less than 1%. So introducing one share, we would make an investment of $179.20, so adding the commission of 99 cents, the investment amounts to €180.19. I would like to emphasize that I made the purchase on the 15th of February. Well, we go on to write down the purchase made in our Google spreadsheet. So I put the date on which I made the purchase, the Hershey ticker, and finally I have to look at the euro to US dollar exchange rate to have it as a reference. As you can see, it gives me a total of €180.19. Then placing the ticker in the first column as always, automatically will appear the number of shares and cost per share. We added it in the consumer staples sector, and as you can see, this investment will allow us to reinvest 0.03 shares annually via dividends. As we are already in the month of March, I will move on to the monthly value sheet, and in the month of March 2024 we will write the €886.16 that our investments are currently worth in the market. And also, I will put the amount of €266.42 that is the value of Starbucks and Hershey investments. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you like the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month. Until next time.